the $1 Million Mortgage Experience podcast. All right, welcome to today's podcast. We are with Dale Vermillion. He's an industry-leading trainer, speaker, and consultant. He started Mortgage Champions in 1995 and has trained over 1 million mortgage professionals and 600 lenders. Dale was named as MPA Housing's Industry Icon and HousingWire Vanguard. Welcome to the show, Dale.
John, it's great to be here. Thanks so much. I'm really honored to be part of your podcast.
Same here. I've been hearing a lot about you over the years, and so it's an honor to have you on, and I know you've done great work, so I'm excited for our listeners and viewers to see and hear what you have to say, so excited.
Appreciate it.
Let's jump right in.
Let's do it.
So tell us your story and how you got in the business.
Well, I was standing on a scaffold when I was in construction, got out of high school in 1979, worked construction for a couple of years, and a guy said to me, "You talk a lot, you ought to be in sales." And I don't think it was a compliment. So I took him up on it.
Instead of saying shut up, he's like, hey, you should get out of this business.
That's exactly right. So I ended up selling pots and pans door to door for a year, believe it or not. Didn't want to do that for a career, but did love sales and got an opportunity to be a loan officer in 1983 and was 12 years in the business, from loan officer all the way to running a national mortgage company with 2,300 employees. And in 1995, decided to start our company, Mortgage Champions, and been training and consulting lenders and loan officers and leaders ever since, and love it.
That's cool. Yeah, I think sales has become like a lost art in a sense, because so many people have gone into this digital world where you just email someone a link and you don't really do a 1003 anymore, which is where you build all your rapport in this business, right?
That's right.
And so it's like, it's become this very detached transactional thing, and it just is not what it used to be. So it's cool to see that you have a sales approach, and I'm sure there's a lot of stuff that you can teach us in the brief time that we have. But you touched on Mortgage Champions. Give us a quick overview of that, and anything else you're involved in.
So Mortgage Champions, we are an industry-specific training consulting firm, and I do obviously a lot of keynotes and podcasts and things all over the country. But our focus is really simply strategy. We teach strategy. I've got 4 decades in the business. Because I've been around 1.5 million loan officers and tens of thousands of leaders, what we teach is best practices on how to build a selling system and leadership system that works congruently and uniformly together to build the best conversion and the best results you can possibly get. We've trained over 700 companies, and we've seen every one of their numbers go up. So that really what I do is I teach what the best of the best do. And I've been very fortunate to be around so many great producers over my career, and that's really been a really great thing.
That's cool. So have you has it evolved, I imagine, over time, or is it just there's like fundamentals that people need to hit, and if they're not, then you can teach those and those kind of last a lifetime, or what kind of touch on that?
It's a combination of both. There are timeless principles that we teach that have been true for the entire 40 years I've been in the business. The core principles of what builds a great sale. And you said it very well a minute ago. It's based on relationship, not sending somebody a link through technology. And we'll talk about that, I'm sure, in our conversation today. But we're constantly adjusting. Every month, I stay on top of what's happening in the market. We're constantly providing new updates on market updates and what positive things are trending in the marketplace, how to attack those things. So, the day you stop learning is the day you die. And we're still learning, and we're still helping people to learn every day.
One of the things that I've heard of over the years about you is that you don't teach to sell rate. You teach to sell payment and benefit and things like that. Can you kind of elaborate on that?
I can. So you probably saw my T-shirt. Rate is overrated. I believe that's true.
It's true.
I've taught this principle called Rate Doesn't Matter for decades and decades. Look, here's the deal. The biggest mistake that loan originators make, and I've seen this my entire career, is in the first 3 to 5 minutes, they talk about 3 things: price, product, and process. And those are the 3 things you should not be talking about. Fact of the matter is, no matter what rates do, people are going to buy, and people are going to need money. I mean, we're in the money business. We're not in the rate business. And at the end of the day, although the borrower is always going to ask you what the rate is and always going to say they want the lowest because that's what they're trained and conditioned to do, at the end of the day, what they really want is they want an advisor who provides an incredible loan for them that gives them what they need especially in an economy like today where people are struggling and they want more cash flow and they want to have reserves for their family and they want to have, debt that they can eliminate. And there's so many things we can do through the mortgage arena. So I'm a firm believer. I say this to loan officers all the time. There's always a cheaper and there's always a faster. So if you're focusing on being the cheapest or the fastest, you don't have a prayer in this business.
Right.
You got to be the better is what you got to be. You got to be the one that, yes, you're competitive, but you're not the cheapest because as I teach loan officers, John, there is no cheapest. Really, when it comes down to it, there's no lowest rate because there's over 6,000 lenders, and at any given time, any one of those has the lowest rate, and it changes all the time. So to get the lowest rate's impossible for a consumer. What they're looking for is somebody who can really help them to secure a mortgage that makes sense both in the short term and in the long term for their life and their families.
That's really good advice. I mean, I remember back in the day, because I always did, I started out in subprime. Then I went and started my own brokerage and never really did the rate thing. And always, I remember there was a time when I changed my title from I was loan officer to mortgage consultant.
Good.
And I just changed my mindset.
Yep.
And it was all now about what's the best for you. Like, what are your needs? Selling the dream. If it's a new kitchen or if your kids to college. And we wouldn't even talk about rate. We'd talk about what it is that they need and how we're going to accomplish that. And then getting into the payment. And then the payment, is that affordable? You have to do the check for acceptance stuff.
Yep.
And let's do a quick run through on like if I was a consumer and I said, wow, your rate's 7.5%. That's so high. What would you say to that?
Yeah, well, first off, they wouldn't know what my rate is because I wouldn't advertise it. That's the first thing. And if a borrower were to say to me or say to, in a conversation, hey, I was calling around, I was just wondering what your rates are, or I've been quoted this, can you beat it? The first thing out of my mouth is going to be, great question. You know what? Our rates are super competitive. We've got some of the best rates in the nation. We've got very competitive programs, but I got dozens of them. Here's the fact of the matter. I don't know your rate and won't know your rate until I know a little bit more about you. This is the first time we've met. Here's what I can promise you. I'm going to be as competitive as anybody out there. And if I can show you I can save you more money than anybody else and provide a better experience, would that be what matters to you? And could I have 20 minutes of your time at no cost or obligation to show you how? That's all you got to say. And they are going to slow right down right there and go, okay. And now you can build a conversation with them. The mistake that we make in the business, John, and you said it really well earlier, is we don't have those conversations. The worst thing you can be in today's marketplace is what I call a link pusher. You referred to that a moment ago, where we've got technology, we shoot them a link, we let them do all the work, they self-serve, we never build relationship with them, we really don't understand their goals, and then the next call we have with them, we're trying to sell them on our products and our program and our price, which is going to be a problem for you. Warren Buffett said, price is what you pay, value is what you get. And I've always finished that statement by saying it's never what you pay that matters. It's always what you get. And that's very true. Mm-hmm. It's true in our business just like any other business.
That's good. Yeah. So, yeah. And I think, it's like you get what you pay for often. And I've used the comment to people sometimes like, not everyone qualifies for the lowest rate. So let's see what, you qualify for. That's not necessarily like a great sales technique, but it's a truth, right? It's like,
it is the truth.
Because some people are going to be, and they don't understand how pricing works. And I think a lot of people just want to be able to brag that they got this lower rate. And, it's turned into a rate game. But I hope that, these newer loan officers that are into this business are going to realize, okay, we got to figure out another way. It can't just be the rate game of what it was in 2021 and in 2020 and when the rates were super low. It's just not there anymore. But people do, like you said, have a need for cash. They have a need for, to solve a problem, especially in like if they're entrepreneurs and business owners and the banks, the Chases of the world they're not giving them the money, because they just don't qualify on tax returns or whatever. So, we do all non-QM at FundLoans, and it's sometimes about rate, but we usually get around that because it's about getting it done when other places can't, when banks can't get it done.
Well, and here's the deal. Even if they do qualify for the best, let's say that they got an 820 FICO, bunch of money in the bank, and a 25-year job. That's salary W-2, okay? My response to that person is going to be, okay, this is great. You qualify for the best. So you're going to get the best I've got. Here's the fact of the matter, though. If you qualify for the best, that means you're used to the best. and you're probably looking for the best, and that's what I'm going to provide to you. Boom. That's what they want to hear. They're looking for a
That's
pro.
true.
They're not looking for somebody who's just going to give them a number and move on to the next one. And in the world we live in today, where every time you pull a credit report, between 100 and 200 lenders on average contact that borrower within 10 seconds, quoting a rate is the death nail today. You start with that, you have no chance of survival in most cases. Even with referral partnerships, that's where a lot of people make the mistake. They're like, well, the realtor referred them to me. That means I get the business. That used to mean that. Doesn't mean that anymore.
Yep.
Consumers today are still shopping online, and if they got a better deal, they're going to say to the realtor, you know what? I appreciate the referral, but I got a better deal on my own. And the realtor don't care. As long as the deal closes, they're like, fine, we don't care. So they're not out there selling your deals for you. You got to sell your deal for yourself, and you can't do it by talking rate.
Yeah, that's a great point. I'm so glad you're bringing this up. That's how I was trained back, way back in the day. The cool thing that we had back then, though, was we didn't have easy access to. There was no email, so it was like faxing and stuff. And you could go to their house, you could sit in front of them, make a relationship, take all their documents with you, and say, "I'll give these back to you when the transaction's over." And it was a much different business model then, where now it's like you have your little file folder that you just forward to any loan officers and just shop for the craziest rates that may not be able to be funded because they're just they're not willing to get it done. They have poor quality of service. So besides rate and that kind of thing, what's another topic that you really like to teach and speak about?
I love teaching on leadership because that's what I did for most of my career. I mean, in the 12 years I was in the business, I only spent a year as an originator, got promoted by the time I was 21 to a branch manager position, and then ran branches, and then ran districts, ran regions, ran a national mortgage company. So I love working with leaders on helping them understand how to lead in this marketplace. But really the thing I do the most is really teaching loan originators how to build a selling system that really works in any marketplace, and helps them to be able to win in a marketplace like we're in today, where the rates are higher than we're used to. Remember, this is nothing new. We've been here before. The problem is just a lot of originators haven't been here before because they haven't been in the business near as long as the rest of us. They don't understand that this is not that new. And you know what? No matter what the rates are, people are still going to buy, and they're still going to need money. It's not going to change.
Right.
You just got to know how to approach it in order to win.
Yeah. On my last podcast, I said something that was like, I thought about this. It was very interesting that loan officers gave their whole book 30-year fixed at the lowest rate they possibly could in 21. And it basically became like the death of the loan officer in a sense, because their whole book, let's say they're in the business 20 years. All of their clients that are repeat clients over the years that they've, made their career off of have become these clients that are satisfied that aren't going to ever need a lower rate. However, they're going to need it, possibly get cash out or maybe another place. What do you say to that loan officer that realizes, geez, I gave them all this amazing product that they're never going to want to get rid of? What do you say to that person that's kind of down in the dumps?
Well, here's the good news. Okay, I'm gonna give you you hear so many negative things about the market. I'm gonna give you the good news about this market that nobody ever talks about. Okay, number one, we literally are in the highest demand for purchase in all of U.S. history. If you look at my generation, the baby boomers, and the generation after, it was 134 million people. You look at Gen Y, Gen Z, 168 million people. So we have more demand for the next 25 years than we can even shake a stick at. So that's going to help drive purchases no matter what rates are going to do at the end of the day. Now, let's talk about refis for a minute, because here's some more statistics that people forget about. There's more equity in the U.S. than at any time in U.S. history. We are sitting on trillions of dollars of equity that consumers have access to, that if they don't use it, they might lose it, because the market's going to shift as if rates stay up, and we're going to start to see them lose some of that equity. So you want to make sure they're capping into that. Number two, debt is by far the highest it's ever been. At the end of the third quarter of last year, 2022, credit card debt was $920 billion. At the end of the second quarter of this year, it was $1.2 trillion. That's a 36% increase in literally about 9 months. Now, I've never seen that in 40 years. So what you've got today is the highest amount of equity with the highest amount of debt, which from a refi perspective creates opportunity no matter what their current rate is. Why? Simple. You leverage their debt, those high payments that they're paying. Most consumers have over $40,000. The average car loan, new car loan, is $41,000. The average credit card for a homeowner is almost $19,000 in credit card balances. They have student loans with $250, $60 payments that have been reenacted in the month of October. They've got home equity lines with a $42,000 average balance in the U.S. Those are sitting at 9, 10, 11, 12% rates. When you add all this up, believe it or not, there are still opportunities to refinance people today, but it's not by changing their rate. It's by changing their payments, their terms, their cash. It's by showing them how to leverage that debt to turn it into opportunity. That's where your business is at, and that's where your opportunity is. So, look, if they got no debt, there's no conversation to be had other than who do you know that's looking to buy a home? Or who do you know that might be needing to save money? But if they do have debt, don't worry about their 3% rate. Let's look at what they have. Let's have a conversation. Let's analyze where their debt is at, because their total payments might be at such a high level because of that debt that you can actually take that 3% to 7.5% and still lower their payments. I teach lenders to do this every day. I have loan officers that I'm seeing close 25 loans a month in this marketplace. Half of those are refis, half of those are purchase. And they're going after that approach.
That's really good. And that's how I was trained, 1997, company called UC Lending.
Yep.
And we had this sheet, and it was like you had what their situation was right now. So it was all their credit card debt, their student loans, their car loans, their loans to, whoever, and then their mortgage payment. You added it all up on one side, and then on the other side, you just did the new payment, the new loan amount, and we'd charge a bunch of points because that's how it was back then. And then the new payment would save them $1,000 a month or $500 a month, whatever it was. They were drowning, even though they had a lower rate. And now you just relieved their whole, monthly situation, got them back on their feet to where they could, be above water. And, just to your point, what you just said, I think that business is out there.
It is.
Absolutely.
Yeah. I mean,
absolutely.
If the borrower says, but I got a 3% rate, I say, but it's not working for you. Like,
yeah, what's that doing for you right now?
It's sitting on it's a number on a sheet of paper in a drawer somewhere that's doing you no good. You're in an economy.
It's kind of handcuffing you, actually.
It is.
In a way.
It is. I mean, we're in an economy where the number one thing consumers are worried about today is how do I create more cash flow in this economy with the price of everything, inflation being where it's at, and how do I create reserves to protect my family, and how do I build my 401k, and how do I create a 529 college plan? That's all money. Every one of those is monetary needs. That's what a mortgage does. We have equity to work with to help people achieve those things no matter what the rates are. And I know there's probably some people out there right now going, are you crazy? Well, do the math. Don't take my word for it. The next time you get a borrower with $40,000 plus in consumer debt, which is very common in today's marketplace, I want you to just add up all their consumer debt payments, add in their mortgage payment, calculate what a new loan would be at the same term they have left on their mortgage, and 7 to 8 out of 10 times, that number's going down by $300, $400, $500. And now you go, wow, I can save them all this money without extending their term one day.
That's good. Yeah, that's a good point about not extending their term because, I mean, being in the business as long as I have, I didn't really get that pushback about, oh, you're extending it back out 30 years. However, if you're a consultant and you're really trying to help your client, you give them that option. You say, well, here, we can do this shorter term or the same term you have, say it's 20 years left or 25 years left. Or we could give you a 30. You just give them that option. You say this obviously be the more prudent thing to do, but if you need a little more cash flow relief, then you can take the longer term. And then when rates drop, you can refi again. I'll be here for you to do it, and all that good stuff.
Exactly right.
We're talking a lot about the past, but technology has shifted over the last, especially over the last 5 years. What's kind of technology are you using? HighTech, high touch approach. Is that important in what you're teaching?
It's critical. You probably know I've been a partner with ICE Mortgage Technology for a long time. I speak at their conference every year, and I've been on a lot of webinars and interviews that they've done. And I've used that high-tech, high-touch phrase so many times over the last 5 years. It's important because here's the deal. consumers want the efficiency and the speed that comes with technology and just the ease of using it. However,
Sure.
the mistake that originators make all the time, and even lenders make, is they try to replace relationship with technology, and you can't do that. This is still the single largest financial transaction that a consumer ever makes in their lifetime. And they want to do it with a trusted advisor and a confidant, somebody they believe is looking out for their best interest. So what you have to do today is you have to combine great technology. You have to have a great online application, great CRM system, great follow-up system on the back end that ensures and allows that you can create uniformity in your applications, better applications for your ops team so that the deal goes through quicker, but also easier access to documentation from the borrower to get commitment faster. That's why you use an online application. But here's the mistake that everybody makes. We send them a link instead of saying, you know what, John? Let's do this. I'm going to shoot you this link right now while we're on the phone. I want you to open this up. This is an application form that we have. I'm going to let you fill out the basics on yourself. You can do that better than I do. And while you're doing that, I'm going to hang on the phone with you and we're going to talk about your new home purchase. Or we're going to talk about that money you want to do for improvements and what other things you'd like to have money for. And now I'm building that conversation where I am co-piloting with the borrower and the technology. Now it's high tech, but it's also high touch. I'm combining the best of both worlds. That's how you win.
That's good. And would you say it's true that the more time you spend, and you don't want to like be a time vampire, but the more time you spend with that borrower, that customer, that client, the less time they're going to have or want to invest in another loan officer. So if you're that high touch, you're making a relationship. It's almost like, I'm already working with this person. I like them. I don't want to, go start over and do it again for another hour with someone else. Is that a good point, you think?
That's a great point. I've said it forever. The time is both offensive and defensive. The more time you spend with them, the more you understand them, the more they know you, the more they trust you, the more they like you, and the better your chance of success. But the more time you spend with them, the less likely they're going to want to do it again with anybody else. I mean, those things hold true all the time in the market. And I remind loan officers of this all the time. If you want to close 15 loans a month, what does it take to do that?
Yep.
One sale a day. That's all it takes. Put one deal a day in your pipeline. That's 21 deals a month in your pipeline. At a 70% fund rate, that's 15 loans a month. So what's your hurry? Why are you in a hurry to get off that phone especially in this market when there's not the phone's not ringing off the walls. It's not raining loans like it did in 2020 and 2021. What is your hurry to get off when this may be the only person you get to talk to today? Make that one count.
That's a great point. Great point. And 15 loans a month is a good living.
That's a great living in this industry.
Especially with the hours that you're putting in. If you're only doing one sale a day and you're spending in 1 to 2 hours with that customer at the most, and then you're doing some other research, pricing the loan, doing some stuff. You have your processor. You're still like your hourly rate is still really high, especially with doing that kind of business. What about nurturing relationships? What are some techniques, skills that you teach about nurturing relationships besides spending more time? I know that was one.
Yeah, so this is probably on the backside where the biggest error is that most originators make is even if they're great on the front end, I don't meet a whole lot of loan officers that spend much time on the back end. They want to turn it over to their team to handle that. And of course, you need to have a team that works in conjunction with you. But at the end of the day, this is your customer and you want it to be your customer for life. And the only way you're going to do that is you got to stay in contact with them. And if you do that, if you nurture them on the back end, not only are you going to avoid cancellations and fallout and ghosting and all the things we see today, but you're going to turn that into a lifetime customer. And that's going to mean repeat and referral business. And that referral business is invaluable. I teach something called the 9-10 rule all the time. And the 9-10 rule simply is this. The average homeowner is going to go through 9 mortgages in their lifetime. Well, I want to get every one of those. If this is your third mortgage, John, I want the next 6 too. I only get that if I stay in contact. In addition to that, you have access to at least 10 other people that you can refer to me. And if you do refer them to me, because I've built a high level of trust, on average, those converted about 40%. So 4 out of 10, I'm going to fund just off that referral. So if I get a loan from you today, do a great job, get 6 more renewals and 4 that turn into referrals at close, That one loan got me 10 loans if I do it right. And that's all built around relationship and nurturing. Now, the mistake that we make in the purchase business is we pre-qualify or pre-approve a borrower. And by the way, you should never pre-qualify. You should always pre-approve because that's all the realtors look at anyway. And when we do that, we put them in the pipeline and then we just don't really follow up with them. And you should be calling them every Friday and every Monday. On Friday, we call that a seed call. We're calling them and reminding them to get out and find a house over the weekend. On Monday, you're calling them back to see what happened, to create accountability, but also to trigger them where if they're really not that committed, they're going to say to you, you know what, John, you don't need to be calling me on Mondays, which tells me you're really not that serious. Or you're going to say, oh, we didn't get out, but you know what, we will today, which means I'm probably going to get a contract this week. So
that's good. Stay
Stay in contact throughout the process. At least you got to talk to them at least once a week minimum, verbally, not email, not text. You do that too, but you have to have a conversation. Right. So you're building and nurturing that relationship. And then once you close, make sure you go to your closings if you can. If not, make a closing call after the closing to check on them. Follow up with them in 30 days, follow up with them in 90 days, follow up with them in 6 months, follow up with them on their loan anniversary, which is their 1-year anniversary, and then every 6 months thereafter, you stay in contact with them.
That's huge. And then you kind of like I think you said it earlier, is then you have to ask for the referral, right? You have to, go through so glad your loan funded, do you know anyone that, right? What do you do? What do you kind of teach at that point? Once the loan funded, what's the best time? It's the best time to ask for a referral, but how would you go about asking for the referral? There's probably a special way, right?
There is. Great question. So first off, plant that seed right from the start. So when I take that initial application and I'm getting ready to tell that borrower, okay, look, John, I'm going to call you back. I'm going to present to you 2 or 3 options for you and your wife to look at. And, when you guys decide you want the one you want, that's what we're going to get for you. Now, by the way, just let me mention one thing to you. I don't ask my customers for really anything but one thing. And that one thing is referrals. That's how I feed my family. But I only ask for those if I do a great job for you. So here's the deal. If you could be thinking about who you might know, here's what I'm going to do. Once the loan closes, if you're totally satisfied, I'm going to ask you for that list of names. And then as you're working through the process, you're making those weekly calls, remind them, hey, by the way, have you thought any more about those names? Things are going pretty good. We look like we're going to close on time. Have you thought about those people you might be able to refer? Oh, you know what? I'll get to that. So that what happens is you don't ask for the referral until you close. Why? Because if you ask before you close and that thing blows up at closing, which happens all the time, you're going to lose that deal and all the referrals too. You don't want that to happen. Right. You want to wait till the borrower has a great experience, then ask them for the referral, and they're going to gladly give it to you, and now you're going to get business.
But you kind of have to do the touches along the way to remind them, right? And yeah, that's good. Well, it looks like you're in a little podcast studio, so you have your own podcast, I hear.
I do.
Tell us a little bit about that.
So it's called Batting 1,000. The reason we call it that, we title it The Heavy Hitters in the Mortgage Industry. I've been very fortunate to have incredible guests. People like Todd Duncan, Katie Sweeney, Logan Matashami, Doug Duncan, Barry Habib, Garth Graham, Clayton Collins. I mean, just really, really incredible people. And we just talk about the mortgage industry, but we talk from a lot of, for example, I had Harry Wilson. Harry Wilson is the president and CEO of a company called Limitless Minds. He's the big brother of NFL quarterback Russell Wilson. In fact, he looks just like him. It's really cool. But Harry, their company works with people on mindset, how to think more positively. So, every month it's a different topic. Sometimes I'm bringing in top originators. Sometimes I'm bringing in top executives. Sometimes I'm bringing in people with just different thought process about how to be better in sales and leadership. So I've learned a ton from the incredible guests that I've had and been very fortunate to really be able to glean information for our clients and the people who watch that show to really know how to deal with anything from marketing to sales to leadership to the market.
That's good. That's good. And I've had a few of those guests on mine too. They're all great people. I mean, it's really cool what you can learn today on podcasts.
It's amazing.
And staying in touch, keeping your finger on the pulse of what's happening in the market, in the world, and it's a great time to be alive in that sense. So what about, I like to talk about failure because, anyone that's been successful has been through failures. Do you have a favorite failure story? Something where you learned?
Yeah, I do. I was a district manager for a company called Transamerica Financial Services back in 1992. I'd been there for 3 or 4 years, was the number one guy in the company, and got solicited or hawked by another company called Associates. Went to work for this guy by the name of Bob Janning, and he was the toughest, meanest man that I've ever worked for. And after a week, I decided, you know what, I'm not doing this. I'm leaving. I'm going back to my old company, and I did. And I went back, and it was kind of like the old thing, when you try to go back in a relationship that was good at one time, but it went south. It just wasn't the same. So I decided, this ain't working either. So I said, you know what, I'm going to suck it up and I'm going to go work for this guy. Turned out 2 years later, after working for Bob for 2 years, he was the best leader I ever had in my lifetime. To the point, and you're going to love this story, John, to the point that my wife, Laurel, who I've been married to for 32 years, we worked together. And I had to go in his office one day and say, Bob, I don't know how to tell you this, but Laurel and I are getting married. And I'll never forget his reaction. He said, man, I'm going to miss you. It was the first thing out of his mouth. But then he asked me this question. He said, well, when you get married? I said, March 7th. Why? He said, where? I said, Vegas. Why? He said, you know what I was thinking? Maybe we should have a leadership conference in Vegas around March 5th to 8th. And I should rent the nicest hotel in Vegas with the biggest ballroom. Maybe we could celebrate your wedding while we're there. And he literally paid for our wedding. So it was an example of where I thought I failed, but I actually succeeded because even though he was tough, he was like a dad to me. He was great.
Let's speak a little bit about, that's a great story. Let's speak about toughness and I think we're in a lot of the generation, you mentioned it earlier, much bigger than the boomers and the Gen X. I mean, I think there's a lot of this generation, the younger generation, unfortunately, have gotten soft. I'm a big believer in the hard times create strong men thing, and then the whole cycle, right? But talk a little bit about why that's important to work for, and just to be able to be around that toughness and what's missing in today's younger generation.
Yeah, so it's interesting,
especially into sales, right?
Yeah, that's a great question. The question I ask every time on my podcast at the end, the last question I ask every one of my guests is this question: tell me about the greatest mentors in your life and what an impact they made. And I've heard some incredible stories from that. Here's the deal. The challenge that I see today is, I agree with you. I think we've gotten soft as a society. And I don't know that it's a generational thing. I think it's a societal thing, to be honest with you. Because I see it in a lot of different ages and age groups and generations where everybody gets their feelings hurt, everybody gets offended, and this is a tough business. You have to have some grit in this business to succeed. But you do. I think the biggest thing that I would say as a recommendation to people is, find people in your company that have been doing it for a long time and they've been through everything. Because I think the reason people are soft sometimes is they've just never had to be hard. That's really what it comes down to. They were raised maybe by parents that gave them everything they wanted and needed. They never really dealt with a lot of adversity. And therefore, when they get into the working world, they think everything's going to work that way, and it just doesn't. The real world. It's
not the real world.
It's not like that. That's right. So if you have not had a lot of adversity, I mean, in my life, when I was 13 years old, my 17-year-old brother died literally right before my eyes. It was gut-wrenching, to say the least, and it really impacted me in a lot of negative ways, but a lot of very positive ways, because it made me go through decades of adversity that most people never experienced, that made me much tougher, and it helped me in my career immensely. You have to have some of that edge in this marketplace. The people that I see that do well, they are tough. There's no question about it. They're friendly, they're kind, they're compassionate, but they have that toughness to them where they don't let things get them down. I see this a lot, I'm sure you do too, where people try to control the uncontrollables. The market's going wrong and they think that's going to affect their whole world. No, the market ain't going to change your world. Like, you just go, you roll with the punches and go, okay, what do I do to solve the problem? Don't look at the problem, look at the solution. That's what you need to do. And that's what people need today. And mentorship can help you do that.
That's such good advice. And Yeah, that sounds like an intense experience with your you said brother, right?
Brother, yep.
Man, yeah, I had a similar situation. It wasn't my real brother, but like a best friend. You felt like brothers. Died when he was 23, and it just was devastating
Brutal.
to me.
Yep.
And you go through stuff like that, and you learn, and you really, I'm also a cancer survivor when I was 25, so I've been through adversity, and you realize how precious life is, and that these little small things don't really matter.
That's right.
And it's gratitude is really huge, and I think that mindset really can help kind of just help you through the whole all the harder times, right? You can go through them, you can do more, you can grind more and stuff like that. So I appreciate you sharing that.
I love what you just said about gratitude. I think that's the key. And if I were asked to give one statement to people today that would help them, here's what I would say: nobody owes you anything. If you'll just remember that, nobody owes you anything. Okay.
Yep.
You if you live with that mindset and you're grateful for everything you get, man, there's no way you can lose. It's just that simple.
So true. And it's something we actually have to remind ourselves to do, and because it's not necessarily something that comes natural. Some people, but like I think a lot of people have to either have some way to remind themselves to have gratitude or be grateful. Because a lot of times things in the world are, we're getting fed so many things at such a high speed.
Yep.
Like I love that movie, The Patriot, where they're all sitting there waiting for the mail rider comes in. I don't know if you've seen that movie.
I have.
And they're all waiting for this mail. And I'm like, think about how often you got information back then. And that was just, maybe they waited a month, maybe they waited a week to get those letters. But today's day and age, you're getting just bombarded nonstop, and there's just so much to deal with, I think, now. And so it is something I think we have to practice, right? We have to learn to be grateful, and we have to learn to practice gratitude. It's not just something that everyone just has naturally.
Agreed.
So what is the best and worst thing about Dale Vermillion?
Well, I guess the best thing is in what I've been blessed to do in my life, I have been everywhere. I've traveled all over the world. I have met so many great people like yourself, so many interesting people, so many successful people, and so many people that are poor and destitute and everything in between. I mean, I've been in the middle of the poorest parts of Africa and India and Guatemala doing missions work with orphans and people dying, of starvation. And I've sat in meetings with billionaires who are some of the most bright people in the world. So I think from that vantage point, and, I've got an incredible family. My wife, 32 years, 4 kids who are great, great human beings, 3 grandchildren. My 4 kids all have spouses that are great human beings. I mean, I'm blessed beyond anything I deserve. Now, what's the worst thing about being Dale Vermillion? Well, the worst thing is I've traveled 17 million miles to see all those places, which is like 300 or 400 times around the world. So, I've been out on the road 5,000-6,000 days in my career, something crazy like that. And I'm platinum everything and titanium everything, and that doesn't work well. That'll just drive you to your tombstone faster is all it comes down to. But so it's a give and take is what it is.
It's a double-edged sword for sure.
It is.
Yeah, I that's interesting. I've been to India, places in Africa, and others, and like Peru and poor countries. It's amazing when you go. I remember the one time I went to India, and I broke down. I was like 23 years old, I think. And I remember walking through a village that was in the mud, and there was huts. And these kids were running through the village, and they were laughing and smiling. They were muddy and dirty and just ratted clothes. And they were just having the best time. And I just started, I couldn't help, I don't know what happened. It just overwhelmed and just like tears. And then I just realized how spoiled, we are as Americans, how blessed we are, but also just how spoiled. And I came back to America, and I don't think I was ever the same. It was an intense experience, but you've seen stuff like that, I'm sure. And Really gives you a perspective, doesn't it?
It really does. I mean, my wife and I took all of our children on missions trips all over the world, intentionally at young ages. I took my boys when they were 8, 9 years old,
Wow.
because I wanted them to experience and understand, America is this very unique country in the world that if we never get outside of our borders and see what else is out there, and that's not to say there aren't poor parts of America, but they're not like you're going to see in a rural India or a rural Africa. I mean, I remember taking my boys on a trip to India and stepping over a woman who'd starved to death in the middle of the night, and she was just laying dead in the train station. And they had to step over her and say, "Dad, is she sleeping?" I said, "No, she's not sleeping. She's passed away." And helping them understand the glaring truth of how the rest of the world lives. And I think as adults, that has helped them to forge them to be the kind of people who are very compassionate and very kind to others because of that. And I think that's really important.
It's huge. It's a huge gift you've given your kids. That's cool. What's your thoughts on not shifting to a totally different subject? What's your thoughts on non-QM mortgages right now?
You know what? It's an absolute critical part of our industry right now. I mean, look, when rates go up and when you get, I've said this my whole career, okay? Rate doesn't matter, but there's one thing you can be sure of about rate. There's one quid pro quo. When rates go up, consumer activity goes down. That's just what happens. Okay.
Yep.
So when consumer activity drops, you need to be more diversified. You need to have more diverse referral partners, more diverse customer bases, more diverse product lines. And part of that is you need to have a non-QM product that will allow you to qualify more borrowers in this marketplace. And the thing I love about non-QM today is it's really positioned right to where the market's at. I mean, we got a lot of cash buyers today. We got a lot of people buying that are self-employed today who are actually the most wealthy, but they can't necessarily prove it in the traditional ways. Or we have people who have had credit issues, but they've got tons of stability and tons of income and financial security.
And equity, probably.
Yeah, exactly right. So I think it's a very necessary part of our business. I think it's a very welcome part of our business, a very important part of the business. And when I work with my clients, I'm always recommending be as diverse as you can. Have non-QM, have traditional products, have Govy products, have your down payment programs. Make sure you've got enough that you can meet the needs of today's borrowers so that you can win.
That's great. What about missed opportunities in the industry here? What are some that you're seeing?
I think the single biggest one is just referral partnerships. And it's from two vantage points. It's referral partnerships with professional sources. And, the number one thing I hear from loan officers all the time is inventory. Well, I don't have to have inventory. And I remind them, you can fix that, And they go, I can't fix inventory. I go, yeah, you can. Well, how do I do that? I go, it's simple. You just expand your network by 3 to 4 times what it used to be. Because the bigger your network is, the more people you're working with who know people looking to buy a home. And, I've said this my whole career. We forget that in the real estate business, a lot of sales happen on the back sheet, not on the front sheet. They don't happen on the MLS. They happen behind the scenes with 2 realtors who happen to know about a house that's going up, and they're having the conversation, and they need a lender that's got to fund that loan. If you don't have that relationship, you never get access to that business. So in today's market, you got to quadruple the size of your network from what it was back in 2021 because the industry is literally 25% of what it was then. So you got to make up for that by the size of your network, and you got to diversify that network. So you're not just working with realtors. We're seeing a lot of the challenges with the NAR right now. We're seeing a change in the way that real estate is going to be sold over the next decade. And there's a lot of great sources out there like divorce attorneys and financial planners and wealth managers and insurance agents and all these other sources that can bring you business. So you got to do that. And the other side of that is customer referrals. Just talking to everybody you know about. Who do you know that's looking to buy? Everybody knows somebody looking to buy. Everybody knows a millennial or a Gen Z that is thinking about buying. And you'll only get them if you have those conversations. So I think that's the biggest missing opportunity in the marketplace today.
That's a great answer. I mean, it kind of goes back to being able to focus on what you can control versus what you can't control. And you can control the quantity of the people you're working with, or the quantity of the prospects, but you can't control necessarily what's the real estate numbers that are listed. But absolutely great point, because it's important to not just be kind of affected and blown by the wind, but to take control and steer where you want to go in life, I think. And that's the difference between those who win and who don't, right?
And sell early and sell often. That's the other thing. Don't get up.
Tell us about that. I've heard that before.
That's a quote I've used for decades. Don't get up and check your email. Don't get up and check the news. There's nothing good in either one of those. Get up in the morning and start calling. Start prospecting for realtors. Start calling your database. Start calling people in your network to talk to them about who they know or what they're doing. If you start your day with positive sales activity, you're gonna create enough conversations that you may not get a loan today, but you're going to get one in the next couple days. And if you do it every day, you start to build a cycle of business where all of a sudden you got a reason to get up in the morning. What I'm seeing today is people are getting up, they look at the news, oh gosh, rates went up again. Then they go to their email, oh my gosh, I got a problem on my file. And they spend all day in that stupid loan file. By the time they even think of talking to anybody about a loan, they're fully depressed. So what good is it going to do?
Absolutely.
It's just the wrong approach to take.
It's so true. I kind of back to the point we were talking about earlier, just the bombardment of information, and a lot of it's that clickbait. A lot of it's that information that is just geared to make you go, oh no, I'm worried. What's happening? It's so true. If we can just turn the news off and just connect with people and make those relationships, and it gives you practice. It sharpens the sword. I mean, I can't tell you how many people I'm sure out there are just so not up on their skills of selling because they just haven't been practicing, because it was so easy for the last few years, as far as when the rates were low, you didn't have to sell. Now it's like, now's the time to roll up your sleeves and get a Dale Vermillion book, or get on your podcast and watch these podcasts, learn how to sell again, and then start practicing, putting into practice those skills that you're teaching. That's what I think.
Yeah, it's interesting because I've been using a graphic lately when I've been training loan officers, where I take a circle and I show it and I go, okay, here's 0 degrees at the top, here's 180 degrees at the bottom. Okay, the 0 degree mark, we're going to call that 2021. Okay, that was a high volume market that was transactional in nature. The 180 degree spot, we're going to call that 2023. It's the opposite of 2021. It's a low volume market that's based on relationship and conversion. Okay, so we can all agree that these two markets are completely opposite of each other. So now here's the question. Where do you as an originator fall on that circle? If you were selling...
And what are you doing right there?
Yeah, if you were selling in 2021 a certain way, how much have you adjusted that down to 2023? If you're not selling 180 degrees differently than you were, then that means you're missing the market. And that always opens their eyes up to go, you're right, I am doing the same things I did 2 years ago, but I'm expecting a different result. We all know that's the definition of insanity, and I see it all the time. So we got to fix that problem.
So what does someone do? They're watching this podcast and they're like, you know what? I like this Dale guy. I've never signed up for anything that he's done, but I need to really work on this bottom part of the circle. How does someone find you to get on your on your team, or get on your sales skills stuff?
Well, the good news is I'm easy to find. After 40 years, I'm everywhere, it seems like. But DaleVermillion.com or MortgageChampions.com. You can go there. You can get with my team. They can help you understand, based on what you're looking for, what's the best program or product we have. We have web-based training, we have online training, we have live training, we have every kind of thing you can imagine, from enterprise to individual and everything in between. So that's probably the best way to do it.
I always have to do a little plug also for myself, and we have this self-employed second product that goes all the way up to $1 million, and it's a bank statement loan second.
That's unbelievable.
I thought of this product back in we launched it August of 21. So, or sorry, August of, do you remember what was it, August 22? August of 22. But we thought of it back in like December of 21, and it took, about 6 months to develop the product, get the investors to buy it. We launched it. We were the first to the market with it, and it was like all these loan officers were saying, I don't want to do a second for my borrower. I don't want to do a second. And, because they're smaller commissions, as you know. But that's why we wanted to do the bigger ones. We focus on the bigger jumbo loans. What are your thoughts on, what would you tell a loan officer if they're saying, I don't really want to do a second for my borrower. It's not worth the headache to get their bank statements, to do a non-QM loan, for like a small commission. What is your response to that?
So the first thing I would say is, so what is your commission on a first mortgage loan? They go 150 basis points. I go, okay, so let me remind you, 150 basis points of zero is zero. That's the first thing I would say to them. Then the next thing I would say to them is, you've got to get with the market. Here's the deal. I said earlier, I talked about refinances with people with debt. And if you remember, what I said was, if they don't have debt, well, there's really nothing to talk about then, unless you have a home equity product. Now there's something to talk about. Nobody's going to spend, the amount of money that it takes to take their 3% $400,000 mortgage, flip it to 8% to pick up $100,000 in cash. They'd be out of their mind to do it, and you'd be out of your mind to sell it to them, because it's not even a good loan for the borrower. That $100,000 will cost them $500,000. Okay, that same borrower qualifies right there for that $100,000 cash. But now you give them a line. If they're affluent, which you'd have to be to qualify for that line, you're giving them exactly what they need in this marketplace. And here's the deal. And this is the biggest thing that people need to remember. It's always, well, I don't want to take the small commission. Small commissions get you big commissions. Always remember that. So by serving that customer today with what they need in the marketplace, you're setting up now that customer as your customer. You've now established a relationship. And a year from now, when those rates drop down by 2% from where they're at today, and all of a sudden it makes sense to go with that $600,000 first mortgage, you're going to be the one to get it. Or that next home they buy, you're going to be the one to get it, because you did it right the first time. So I would tell them, park your ego at the door, stop, being what I call an elephant hunter, chasing the big commissions, and take what you can get in this marketplace, because every deal you close is good for your future, and it's good for your present. Some commission is better than no commission.
Yeah, and that's an amazing point. And I think it also matters that you're getting paid still to keep a customer. You're getting paid smaller, but you're still keeping a customer that's not going off to someone else, because they're going to fly away. Someone else is going to give it to them. And you're
gone.
Not as concerned, and you're gone.
Exactly right. So
you just lost that customer.
There you go. You got a commercial for your product right there.
And what you said was like exactly what I want every LO to hear, because it's so true. It really is true. It's good advice for mortgage brokers. Absolutely. It is. Any shout outs? I know your son's helping with the podcast, but any shout outs that of some people that have helped you along the way?
Jake, you're a stud. Want to thank my whole team, Michael Percato and David and Jessica. They're great. Obviously, my spouse, she's still the love of my life after 32 years. That never changes. So, and look, I really want to just shout out to the whole mortgage community. Look, this has been my home for 40 years. This industry has been incredible to my family. And it's only been incredible to my family because of people like you that I get to work with, Jon, where, I'm able to hopefully help people to succeed. And in doing that, it creates income for my family too. So, we're in the greatest industry ever. And when people leave this thing, say, well, I'm thinking about leaving the industry, I look them dead in the eye and go, what are you going to ever do? First off, that you can make more money. I mean, I have a high school degree. That's it. And I've done everything I could ever dream of in this industry. But not only that, our product's money. I mean, everybody loves our product. It's never going out of fashion. Everything matches with green. So why would you want to leave this industry?
So true. And it is kind of like I shouldn't say a curse, but it's like a blessing and a curse, because it's like, it is such great. And if you get good at it, you can make such good money in any market. Back to your point, is there's always a need for either cash, consolidation, or people that are willing to buy a house, in all markets. So good shout outs. And I'm thankful for this industry as well. Sometimes, there's those days when you're like, man, this is way tougher, and you get a little spoiled because of the years before. But, it's just, you got to remind yourself that it is cyclical. It's going to come back. There's going to be lower rates at some point, and if you stay in it and you keep working hard, and you're going to continue to make good money in this industry. So
yeah, pretty simple law to apply. What goes up must come down. Just remember that.
Yeah,
I mean,
absolutely.
It's not going to go up and stay up forever. And as rates go down, we're going to see the market really improve dramatically again. And this is just the right business to be in. That's all there is to it.
You want to be there for that time, and you also want to have a way your customers can continue to contact you.
That's right.
Yeah, I've heard of a lot of LOs getting out of the business too, and it's like, well, I guess that's the strong survive, right?
Well, and the funny thing I'm seeing nowadays is a lot of people taking second jobs, and I just look at them and go, okay, the time and effort you're putting in that second job, if you would just put that in the right direction in this industry, actually get out and meet with your referral partners, quit sitting in your living room and thinking this is a work from home world, because it's not anymore. You got to be out. You got to be out there in the community. You got to be out there with your partners, and just make some phone calls. You would make so much money, you wouldn't need that second job. So if you're watching this today and you're in that position, my encouragement to you is, don't waste your time with a second job that's going to make you a little bit to survive. Really take your time and focus it on talking to as many people as you can, and you're going to see some great numbers.
I love that advice. So true. Well, I appreciate your time and coming on. It's been an amazing time getting to know you and all your advice that you've given. So I appreciate you taking the time to be here.
Well, I can't thank you enough for asking me, John. Really an honor to be here. Keep up the great work. You're doing incredible work in the industry, and I know your guys' company's adding a lot of value. So thank you for that. I appreciate you very much.
Appreciate you. Thank you. And everyone watching, thanks for watching. Please like, share, subscribe, comment. Go check out Dale Vermillion, and we'll see you on the next podcast.
The $1 Million Mortgage Experience Podcast.